Good morning and welcome to today's morning report analysis videos on Wednesday the 8th of August with me, Richard Perry, market analyst at Hantec Markets. We have got an interesting move that we've seen on markets today. We had initially a degree of dollar correction, and that initial dollar correction has now unwound and started to sort of gain a bit of traction as well. The euro was about 0.2% higher. That's now 0.1% lower, so turning around about sort of 30 pips or so in the last hour or so, as the Europeans have really sort of grasped hold of this, and sterling continues to underperform, but the yen is the outperformer. The yen is the outperformer, and this is sort of coming as we've seen on dollar index is still slightly lower, but you've got this Chinese yuan, which has been sort of a bit of a driver of the dollar in the last few days, and that initially was stronger, but that's turned around, and it certainly is seeming as though that's helping the dollar to reclaim some of the performance that it had lost, certainly against the euro and sterling, and some of the other forex majors as well. And this is sort of playing out. Sort of I talked about the yuan because you're not really seeing too much movement on treasury yields still. Treasury yields are still fairly sort of subdued, not really going anywhere. And I think it's more the Chinese trade story, because we've had the announcement that the US is going to implement the next sort of $16 billion worth of tariffs on China from the 23rd of August at 25%. And that is sort of, again, sort of keeps this trade war fears at the sort of top of the agenda for traders at the moment. And whenever that happens, the dollar tends to perform better. Also, you are also seeing, as I said, the yen performance coming as maybe a bit of a safe haven bid, because you can see also gold pulling higher as well. Now that consolidation on gold continues, and I'll talk about the chart and implications of that in a bit, but certainly we are seeing that. Also, equity markets were strong. We were positive on the S&P 500 yesterday. That continues to pull higher within this uptrend channel. Those all-time highs of 28.72. Not a million miles away, certainly, and looks like it's sort of positioning for a test of that. However, European markets have not really taken the metal, not really grasped the sort of control of that, and just slipping back on the DAX. FTSE outperforming, but the DAX underperforming, as tends to have been the case as trade tariffs are sort of on the agenda. So, what are we looking for today? Well, not a great deal of data. We've had overnight the Chinese trade data, trade balance, coming in lower than expected, imports improving, and well, imports much higher than expected, which has driven that correction, that tightening of the trade balance, but not really having an impact on risk and market positivity today. Now, the EIA inventories, well, annoyingly, Reuters are not giving me an expectation, but I can tell you that the expectation is around about 2.8 million barrels of crude drawdown. And then we've got the RBNZ later this evening, 1.75%, so that's as we were on the RBNZ. But not a great deal to drive markets today. Charts of the day, EURUSD. Now, we've had the RBA monetary policy decision, and that is now out of the way, which is leaves us to sort of see where the markets are trending now. Now, we've had this consolidation in the EURUSD in the last month, 6 weeks. However, that consolidation broke down on Friday, and that breakdown is being confirmed. Seems as though that old support becomes new resistance. That old support that was in at 56.55 is now the basis of new resistance, and it seems to certainly be that in the last couple of sessions, that is, or 2 or 3 sessions, that has played out in that way. Now, you've also got a bit of a small sort of basis of support as well, if you sort of follow this green line, and that comes in around sort of 56, well, about 57 figure really, if you take the lows. So you've got a nice little resistance band, so overhead supply between 56.55 and 57. So that gives you a nice little selling opportunity, and you've still got these momentum indicators which are rolling over. The MACD lines gaining a bit of traction to the downside. Stochastics negatively configured. RSI around the 40 mark. That's the lowest it's been since mid-June. So it certainly certainly confirms the breakdown of this range, which if you calculate it from 58.90 area down from 56.55, which is about 230 odd pips of correction, it gives you a likelihood of a retreat towards this mid-June low 54.25. So it certainly does look as though the market is positioning with these moving averages converging to turn down in bearish sequence as well. It looks like the market is sort of positioning lower and rallies are a chance to sell. We've had that unwinding rally again, sort of back towards the neckline of that breakdown, and it's failing. So this looks like this opportunity is here. So I wish you good luck in your trading, and I'll speak to you again later.